لا. Assalamu alaikum wa rahmatullahi wa barakatuh, and welcome to another podcast episode of MuslimFin. Tonight, an interesting topic, a topic that we've seen quite a bit of heat and you want to call it trending out there, a topic around investments. It's down Ali's alley, Ali, the wealth and investment specialist on the panel and on the MuslimFin team. He's the one that's going to take us through the investment topic. Ali, I'm going to jump straight into it. To be honest, I don't really know how to put this the way that it should be put, but I'm going to try to put it in as straightforward as I can, but in a way that you can answer it in the best possible way. So the topic that has come up quite a bit offline, through our messages, through our emails, is what is the three best Sharia Islamic or Sharia investment vehicles or accounts out there?
Okay, firstly, Assalamu alaikum wa rahmatullahi wa barakatuh to you and Fatima, and then to the viewers this evening. So always happy to be here. And shukran for your question. I think, we have to just take a step back and always remember that, we're not providing any type of investment advice. And with that disclosure made, just in terms of the investment solutions that are available to Muslims, we have to remember that from an Islamic perspective, we really have there is a universe of investments that are available to Muslims, right? So really, in many cases, what is available to a person on the conventional side would also be available to Muslims. Of course, there are certain restrictions that we have to take into account, right? And the restrictions are around the fact that as a Muslim, or from a Sharia perspective, you are not allowed to invest in things like businesses that deal with pornography or gambling. Some of the ulama will say that the purchasing of weapons, for example, or companies that deal with weapons, in certain cases. There's also, businesses that deal with riba or interest or large portions of, riba, like financial institutions, like banks in certain cases. Okay, that you're not allowed to invest in those things. And there are a few, alcohol, for example, it's another big one, right? So, but then when you have those restrictions kind of set aside, and you know what industries you can now invest in, well, then after that, then you can kind of pick, okay, well, what is your goal? Okay, firstly, as a person, as an individual, or as a business, or, if you have your investments held in trust, for example, then you have to understand the goals of you as an individual, or of the structures that the investments are held in, right? And that's the most important, okay? And then the based on your goals, you then have investment solutions that speak to your needs, or speak to the needs of the trust, or speak to the needs of the business, right? And so from that perspective, if you think of, investment vehicles, you use the term investment vehicles, or what they would refer to as an asset class, okay? There are multiple asset classes. So what I would say is one of the first asset classes, probably the most common, and one of the asset classes that almost everybody is aware of or familiar with, is stocks or shares or equities. So those terms, they all mean the same thing. So a stock, a share, or equity, or an equity, or equities, they are interchangeable. They mean the same thing, and they refer to basically the share price of a business, right? So you can go onto the Johannesburg Stock Exchange, and you can see the value of a business, and then you can purchase a share of that business. So it then becomes ownership in that business, right? So I own one share of company ABC, for example, right? And then I can purchase more shares of company ABC, or I can purchase shares of company DEF, So then I can have a portfolio of shares, for example. And so what's nice to know is that, you know, we have people that are doing that from a Sharia perspective for you. They are vetting the companies. They are making sure that they don't have too much exposure to for example, there's the 5% rule where they allow a business to have maybe 5%, you know, interest. And they have other rules where they'll say, for example, and I can get into more specifics with it, but I'm just mentioning it briefly so that you guys can get an understanding of it. And where they'll say, for example, that a client cannot, a share or a business cannot have too much debt. You know what I mean? So debt to the kind of the debt to income ratio. So so these portfolio managers, for example, that will look at the universe of shares or stocks or equities within, let's say, maybe the South African context, okay, and say from a South African context, depending on the mandate of that portfolio manager. So they'll say, by mandate, I mean that they'll say, we are allowed to invest in certain types of companies. Okay, so by certain types of companies, we'll invest in large corporations that pay out, for example, dividends. Okay, which means that our clients are going to get regular returns, okay, paid out to them by these companies. Okay, or they'll say, you know what, we actually focused on a value. Okay, so value is a strategy that the portfolio manager. So they'll say, what we try to do is we try to find companies that are undervalued, and we can see that, you know, if the market trends follow according to what we foresee, then this company is going to provide our clients with value. So the value of that share is going to eventually go from R1, to use an example, R1, to eventually R1.50. All right. And so that's kind of what they call a value play. So you have quality, where they have large corporations, okay, that will potentially pay out dividends, even if there's market fluctuations. Those companies don't perform poorly normally. Then you get companies that are in the kind of that value play, and then you can have companies that are like in the growth kind of strategy, where they say, oh, you know what, we're going to buy this company cheap, but we know if this happens, for example, then this company is going to grow. But we know that in this case, there's quite a bit of, you know, let's say, volatility. So there's a likelihood that it could happen or not happen. But then, you know, it comes down to, again, your goal as an individual or as a business, or, you know, money held in trust, and then what it is that you're looking to achieve. So I'm just giving you a kind of understanding of how the share or stock or equities, you know, kind of work. But that's one of the asset classes. So it's nice to know that you can then go to, you know, various portfolio managers within South Africa that offer Sharia compliant funds, right? That consist of let's say 20 different shares, for example, or in certain cases 30 different shares, or sometimes they may even go up to 70 different shares, for example. In most cases, it would average around 25, 30 or so, okay? And then what they'll do is they'll constantly evaluate those shares, okay, to make sure that they meet the Sharia compliancy, you know, kind of status, and then also to make sure that it does what the mandate that I referred to earlier in terms of that value or quality or growth play, that it does what's said on the tin, right? So what they want to do is they want to make sure that, you know, when you invest your money, that if it is that your goal is to achieve a certain return within a period of time, so, you know, Shamim wants to buy a house within 5 years, he's going to invest his money now, and then within 5 years, hopefully, if the investment does what it's supposed to do, it should potentially give him that, you know, type of return in order to purchase that property. For example, that was maybe one of the goals, right? And so now they have to also make sure that 25 shares or equities or stocks within that portfolio are going to help Shamim achieve that, right? And that's why it's important for, and I'll follow up with this, but that's why it's important that we, as a community or as an investor, remember that we have to sit down with the people that are giving us advice. And we have to understand that our portfolios on a regular basis, at least annually, are doing what they're supposed to be doing. So that we can say, okay, how do we then maybe change the strategy? Or, okay, the strategy is doing what it said it was going to do. I'm happy with that. I feel like it's still going to achieve what I wanted to achieve, right? So that is one of the first ones. So let's call that number one. So we talked about shares, stocks, and equities, and I'm only touching on it briefly. We can go for days just talking about this one asset class, right? Now, and I only mentioned the South African perspective. There's also the entire universe in terms of a global perspective, where you get access to different geographical locations, different currencies, different, structures, and so many various ways of putting together a portfolio. Then the second one that I would like to maybe touch on is also unit trusts from a South African perspective. So a unit trust works a little differently in the fact that it is also dealt with differently from a tax perspective. Okay, so normally when you look at a share portfolio, and sometimes they'll refer to it as a segregated portfolio, each share within there normally gets dealt with separately or individually, which means that I can sell out one of the shares, okay, and then I maybe pay the tax, whatever taxes on that. I'll pay the taxes on that, and then I can replace that share with another share that might be doing better than the one that I've kicked out of my portfolio. Okay, within the unit trust kind of wrapper, okay, or within the unit trust environment, all of those taxes are then paid within that wrapper. So you don't have to then go to your accountant and deal with it. The portfolio managers or the administrators of the fund will deal with all of that and make the changes within there. So what ends up happening with unit trust is that there are hundreds or thousands of people that invest their money into the same strategy, into the same portfolio, into the same investments. And when changes are made, within the portfolio, you don't necessarily get, maybe you'll get informed in terms of your statement and, if there are certain corporate actions that you need to be aware of. But you won't necessarily get informed of the underlying investment changes in many cases. So they don't do it often, but if they do decide that they're going to kick out one share and replace it with another share, it's just going to be something that's going to happen. Normally, it's a time-sensitive, type of thing. So they feel that these things happening within the portfolio manager feels that these things happening within the market where they need to make this change potentially quickly, and then that's going to be in the best interest of the investors. Because at the end of the day, the portfolio managers are the people that you hire. So as an investor, you put your money with them, okay, and that's comes back to from the Sharia perspective. It comes back to that the way the contract is set up. You know what I mean? So you have the mudarib, for example, and that is the portfolio manager in a sense, and you are entrusting that person to then take your wealth and then achieve a specific goal with that fund. So the unit trust is then a little different to the stocks or shares or equities, in that within the unit trust there's not only shares in there. In there, there are also other asset classes, and some of the other asset classes would be, and then this is how I lead into maybe the third investment, okay, would be sukuk. Okay, so sukuk is a a quick explanation is very similar to a bond. And I think we talked about this previously. A bond being either a government bond or a corporate bond. And what that means is that, the government will say that, if you give us your money, for borrowing us your money, we will give you a return, a yield. Right? Or corporation says, we need to raise funds. If you give us your money for you giving us your money, we'll give you a specific yield, right? We'll give you a return. And so sukuks, what they have are what they call duration. Okay, and with duration, what means is that you have sukuks that run over certain periods, right? So they have short periods of 3 months, 6 months, 9 months, 1 year, 2 years, 3 years, 5 years, 10 years, 20 years, you know. And with duration, what that means is that your money is going to be locked up for a shorter period of time or for a very long period of time. Okay, and so what happens within the unit trust environment, we're talking coming back to the unit trust environment, is that when you combine the shares or the stocks or the equities with the sukuk, there's a bit of an inverse relationship, right? So when the shares do well, sometimes the markets maybe with the sukuk may not do as well, or the sukuk do better, and but the shares maybe don't do as well. And so what that does is, the idea is to give you a steady, even line of returns. Although within the portfolio it might be doing this, but over time you are getting that steady return, based on your risk profile, or based on the risk profile of the trust or your business. And so a sukuk is a very it complements the other asset classes within a portfolio, of which shares or stocks or equities are one of them, and then they go quite well with sukuk. Now, it's important to remember that with shares and stocks and equities, those they are going to give you the best return in the long run. Okay, but what you want to do is how you take off risk, basically, in terms of your investment, is that you give yourself exposure to other asset classes. So when shares don't do as well, like I said again, that inverse relationship, then the sukuk may make up for where you may experience some losses. And some of the other asset classes within a unit trust portfolio would maybe be, for example, a property, property shares, or investing into property, or investing into commodities, things like gold. But just coming back to the sukuk, for example, the sukuk, again, you have to remember that what's different from because I said it's similar to a conventional bond, right? I said it's similar to a government bond or a corporate bond. And it is similar but different, right? And the difference really is that, within Sharia finance, there always needs to be some form of backing, right? There needs to be a sukuk needs to be it's either asset backed or asset based. Okay, so I'll give you an idea. So for example, a sukuk could be issued, and what you'll find is that in many cases you'll find, or in certain cases you'll find that farmers are very much involved in the issuance of sukuk, and you think, oh, but most farmers are not Muslim, and you go, but now how are they involved? Well, I mean, because they are the farmers. They are farming for all of the, I mean, we have the mining industry, but we also have, farming. So there's something tangible there, all right? So it could be barley. It could be, in certain cases, it could be the equipment that they use. It could be, even the dams or the other assets that they own on the farms. Those types of things can be used within a sukuk product. And so sukuks are quite interesting because they give back to a country, for example, or to a business, and they end up giving back in ways because it invests in tangible assets in many cases. So I think there was a long-winded answer, but I think I tried to answer your question there. But so the three types of investments that you can get would be your shares or your a segregated share portfolio, or you can invest in individual shares yourself if you like to. There's different ways of getting access to investing in shares. That's maybe something we can also talk about. Then there's within, there's those unit trusts. Okay. So then that's a different type of investment vehicle again. Okay. Of which you're going to find shares in there, and you will find other asset classes in there. And one of the main ones that you can invest in within kind of the Sharia world would be the Sukuk product.
Yeah, like you said, Ali, I don't think there's a shorter way of packaging this information, given the vast amount of information under the wealth and investment umbrella for these three options that you've given us. But it was quite insightful, given all that information. I mean, it gives me and the viewers out there quite the insight into the different types of parameters and characteristics of all of those three investment avenues. And I think, look, being in a bit of the financial world or in financial segment, I guess it also comes down to, like you mentioned, the person's risk appetite, their goals, and possibly their time frame. They would necessarily need to invest in those type of asset classes. But I think Fatima had a question as well. Fatima, if you want to shoot your question over to Ali, go ahead.
Yes, so I'm going to ask the age-old question of, so when doing an Islamic investment or choosing of these Islamic investment options, how do they generally compare to the conventional investments? Because with conventional investments, when we see a conventional portfolio, you're going to be seeing not only dividends but the word interest come about. How do they compare in real world to conventional investments?
Yeah, that's an excellent question, and this is the like you said, this is the, I guess I want to call it the age-old question, like you mentioned, because it's a question that constantly comes up, and it's important to understand that that difference between interest and profit share, and so we talked about this in some of our previous podcasts, in how the funds are separated from conventional investment, from investment perspective, in an investment perspective from the conventional side of things, right? And so it's important that from an investment perspective, it's also that, and that's why we talked about the asset backing, right? Is that we have to remember that on the Sharia, within the Sharia space, there always has to be something tangible, something that you can access. It's always that one-to-one relationship, where it's like for every rand that gets invested, there needs to be something worth a rand that's backing it, whether it's in a commodity of gold, or in the form of a share that belongs to a business, or something. But there has to be something that specifically, tangibly backs that 1 rand, or that funds that you are investing as an investor from a Sharia perspective. And so so a lot of people ask, well, okay, now what's the real difference? I mean, I'm getting interest, and on the one side, and on the other side, I'm you're just calling it profit share. Is it the same thing? It really isn't the same thing, and that's why I started off the conversation around firstly making sure that within the investment world, it's important to understand that there are firstly that from a portfolio management perspective, the overarching kind of perspective of making sure that all the industries that you're investing in are halal. Okay, so you cannot go into anything that's related to any of these unhalal type of investment. So you're not going to invest in anything with alcohol, like I said, pornography, gambling, or any of those things. So that's key, right? Then there's an additional layer above that to keep the portfolio managers honest. Okay, what you'll find is that they are normally on the there's a panel of what they call a Sharia Board. Okay. And they are also reviewing what investments the portfolio manager is investing in and saying, okay, they will give their view on, that share or that industry or, the choices that are being made in many cases. Okay. So there's that additional layer of checks and balances. And sometimes, that will create an additional cost in terms of the administration of the portfolio. But now coming back to your question on the performance, right? So people say, yeah, they've got this, the additional administration, they've got the additional people, they now have to pay the muftis, and, they have to have all of these other people also review the investments. Okay, so now obviously there's an additional cost. So the cost eats into the performance, right? And then you're also limited because pornography is potentially $1 trillion industry, but what you'll find is when you actually go out and look at these portfolios and at the certain portfolio managers, and this is where you have to kind of build a relationship with your financial advisor who can help you go and hire the right people, But when you do a comparison of the conventional against the Sharia investments, you'll find that in terms of performance, sometimes the Sharia portfolios will outperform, and sometimes in a big way, and sometimes they may underperform. Okay, but for the most part, when you compare the two from a conventional and a Sharia perspective, they are very much on par. And what's very interesting for me is that when I look into, because from a South African perspective, South Africa is about 0.5%, or the South African market is about 0.5% of the globe's, kind of market, the global market, in terms of investments or exposure to investments. But when you go outside and you start looking into what some of these other companies are doing, and I'm talking about large organizations like the Dow Jones, the S&P 500, companies like BlackRock, who see the value of Islamic finance and are developing investments around, Sharia compliance and compliancy and investments. When I look at the performance of those types of investments, in many cases, I'm shocked, and I'm pleasantly surprised to find the types of returns that you'd see, But again, it comes down to the need, it comes down to the goal, it comes down to the risk appetite of the individual or the structure or the business. And but yeah, there's definitely, in terms of performance, it's competitive, and that's really it gives me a lot of pleasure to say that, and I say it with a lot of confidence because there's very, very smart people out there doing great things. And I think what we need to do is we need to give them a kind of pat on the back and say, well done, great job, keep up the good work, keep doing what you're doing. And then in some cases, when the guys are not doing what they're supposed to be doing, then then they, unfortunately, they're not going to get your investment money. Yeah.
Ali, shukran again for that insightful comment. I think we probably have about a few minutes left. We just about made it in time, although we went through quite a bit of detail. So that was quite, let me go one step back. That was insightful. I mean, for me alone, going through all that information. If you have any comments or questions for Ali, please pop them down below. And if you feel the video was helpful, in any way fruitful for you, please hit the like button. It will help this video go much further, and it might help a lot of people out there trying to look out for this type of information. From the panel, that's it for us for tonight. We'll see you guys next week. Assalamu alaikum wa rahmatullahi wa barakatuh.